Russia invades Ukraine over the weekend. What does that mean for energy bills going forward? Coming up here on The Job. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 8:13 here in the middle part of the country on Tuesday. It is February 22nd, 2022. That's a lot of twos in the date. Here's your morning jog around the economic headlines of the world. Where else would I start but Ukraine? In fact, now it's sort of part of Russia because they moved in. Russia moving into Ukraine over the weekend, quite frankly, doing it with exquisite timing. Why is it exquisite timing? Well, they did it while the futures markets were closed, so folks had a couple of hours to digest the entire situation. We've got sanctions coming on later today from world leaders. Big one already out. Germany's Chancellor Olaf Scholz says they are not certifying the Nord Stream 2 pipeline that delivers gas from Russia to Germany. That's a truly big step, right? Germany, of course, will bear the brunt of the cost of that sanction. Sanctions work both ways. They cause economic pain in both directions. It's going to send gas prices meaningfully higher in Germany and throughout the rest of Europe. But really, Germany being the closest to Russia will feel the pinch the most. That is the real big question with these sanctions. How much pain can Europe take? Because sanctions pain works both ways. If they put additional sanctions on the energy portions of the Russian economy, that could spell meaningfully, and I'm talking $10, $20 a barrel, meaningfully higher oil prices on a go-forward basis. So you're talking about one of the major producers in the world, like 8 or 9% of world oil supply is delivered by Russia. On a go-forward basis, what does this mean for the overall economy? As oil prices go up, and right now Brent's trading at about $97 a barrel, you're going to see it act as a brake on the pace of the overall economic recovery from the COVID pandemic. We've talked about rates being a big brake on the economy. Input prices, oil, energy specifically, really hurts the manufacturing sector that's been doing very well. Right as we came out of the COVID pandemic, goods really at close to an all-time high. You're seeing tremendous capex by companies throughout the economy. If energy prices get high, it really becomes very hard to make those energy-intensive capital investments. Think factories, roads, additional manufacturing lines, right? Russia, their economy is largely based on producing raw materials. Think oil, gas, aluminum. Those are things you need if you're going to invest in capex. This is going to meaningfully affect the economy overall, but there are some bright spots. Let's take a look at a company like Macy's this morning that reported increased revenues above expectations, increased profits, and earnings guidance higher. If we see companies able to source products and sell them at meaningfully higher prices to consumers, the market overall could tread water while this geopolitical situation de-escalates. Profits will be the real key to keep an eye on. Earnings creates a floor. As you see, if earnings goes up, that sort of lowers the total price earnings ratio of the market and creates an opportunity for value-oriented investors to come in and buy shares on the cheap, creating sort of a floor for the overall market. It is a situation to be aware of and certainly something we're monitoring. If you want some additional information throughout the week, feel free to follow me. As always, I am out there on the internet. Until then, I hope you have a very nice rest of your Tuesday. I am out.